Technically speaking, whenever Bitcoin loses a support, we can always see a relief rally take place to turn this old support into a new resistance. So is Bitcoin on the cusp of a relief rally before actually seeing further continuation to the downside? Subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like this going forward, and let's dive right into the video. So a few weeks ago, we've seen Bitcoin lose the 27,200 level as a support after successfully holding it as support for a few months at a time. We saw this hold quite nicely, even downside wicks showing lots of buy side pressure from here, but we never really saw lots of continuation afterwards. In fact, we formed a higher high here and effectively rejecting at this resistance of around 30k. And since then, we've not been able to generate the same sort of reaction as a few months ago last month. And in fact, we saw a monthly close below this level, and now we have seen a very different reaction in terms of buy side pressure. Very little, if any, buy side reaction from here, and we've broken this support quite successfully. But there is scope for a relief move just to turn this old support into a new level of resistance. And of course, you might be thinking, could Bitcoin actually relief rally into 27,200, maybe even produce something like this, some upside wicking beyond that level? That's always going to be a possibility in terms of tagging a potential new resistance, an old support into a new resistance. But generally speaking, what we want to see is a monthly close above 27,200 to regain that level as a support, because if it can't do that, then that's going to be a rejection. And one of the things to keep in mind here is that we're going to see a lot of confluence with that 27,200 level, with the bull market EMAs that we lost a few weeks ago. We lost them quite convincingly a few weeks ago with an upside wick into that moving average resistance area, and since then we've just been slowly but surely bleeding towards the downside ever since rejecting from that level. And it's interesting to see that this is a confluent area of resistance for Bitcoin. Once upon a time, a few months ago, we saw these EMAs act as a support, enabling a move to 30k. Now we're seeing the opposite. Actually, we're seeing that this level is now rejecting price, and we've been seeing price dwindle ever since then. And one of the things to talk about right now is the double top formation that we mentioned earlier this month, or at least last month. Time really does fly. We've spoken about this double top formation that we're seeing form on Bitcoin. And one of the things to confirming this formation and seeing this measured move play out to 22k, the key thing was 26k lapsing as a support, and the new weekly close has occurred below 26k support. So you can see for the past 3 weeks or so, we were holding here as a support, even producing downside wicks, much like we saw a few months ago before we saw a reversal. But the thing with these downside wicks is that we're not really generating any reaction, no green candles in sight. And in fact, despite, or rather than no real reaction occurring here, we also got a weekly close below 26k, even though we've seen these downside wicks. So there is a threat of 26k lapsing as a support now. Downside wicks are occurring. Some sort of buy side pressure is occurring, but we're still losing ground. We're slowly losing this 26k level. And if this 26k level acts as a resistance going into this week, maybe even next week, then we'll see a breakdown occur for the double top, a validation for this double top formation. Because for this double top to fully validate, we have to see 2 steps of bearish confirmation. One step, the first step being a weekly close below 26k, and then the second step is to turn this old support that we saw a few weeks back, turn this old support into a resistance by a relief rally as well, to turn this 26k into a new resistance, and that would confirm a breakdown from the double top, and that would essentially open Bitcoin up to a potential measured move to as low as 22k, which is around the bottom of this right shoulder This right shoulder being the inverse head and shoulders that we've seen play out in around March of this year. So left shoulder, head, and right shoulder. So a measured move would take us to 22k, which is the bottom of that right shoulder, which is interesting confluence in terms of support. So turning this 26k level into resistance, that's going to be a bearish signal for price. And also talking about the RSI here is that we've been seeing lower highs in the RSI and even progressive weakening in the RSI, as we saw another lower high take shape here, rejecting the RSI. And in fact, this area of previous support here, we've seen support over the past, really this year. Throughout all of this year, we've seen the midpoint of the RSI act as a support, and we've recently lost that level as a support. And in fact, we haven't been able to recover since then to turn this area into a resistance. So if we do see some sort of bounce in price action, we'll see a bounce in the RSI. But if the RSI rejects from this confluent area of resistance, that is the RSI 50 midpoint, and this lower high resistance, then we're probably going to see a local top in price at that analogous time. But at the moment, we don't even see the RSI flicking up at all. We're just seeing it kind of flatline ever since losing this area as a support. But make sure to keep this in mind, that we'll probably see this area act as a confluent area of resistance should we see some sort of relief rally take place. So for Bitcoin to relief rally into 27,200, it would need to reclaim this 26k level first. And at the moment, it may be acting as a resistance. And if it does act as a resistance, we're going to see this double top play out, so we won't even see relief rallying on the monthly time frame. So as long as 26k continues to act as a resistance, this is opening things up to a return to 22k. And in fact, what's interesting about the lower 20k region is that there is actually a CME gap on the daily time frame right over here. And that's quite interesting because we had it over here develop and get filled, but upon emerging out of this demand area, we also formed another one in the same exact region pretty much, and that's a CME gap that resides there. So if we see a double top formation validation from these levels, we could drop in to this region via a downside wick. CME gaps don't necessarily have to get filled, but if we get into the 22k region right over here, then we're very close to downside wicking to fill the CME gap and emerge out of there without forming a new one, just like we did here in March of this year. And what's also interesting on the upside is that recently we formed a CME gap, we filled that one quite nicely, and it doesn't look like another CME gap has formed, so maybe we don't have to relief rally to fill a CME gap. There is no real CME gap left to the upside to 30k because we've already filled this one. And if you'd like to learn more about this CME gap, feel free to check out my video in the top right hand corner about it, and I'll speak to you in that one. Speak to you soon.